Hey everyone, Chris Johnson with Money Morning. Gold's run is incredible, up 11% in September. That's historic type of moves. Is it done? No way. There's about 39 different reasons. I'm going to go through a handful of them, but I'm expecting a little consolidation in October, which gives you an opportunity. An opportunity to do what? Get in before the next 13 to maybe 17 or 27% return. And more importantly, I'm going to show you an easy strategy for leveraging those gains. It looks a little something like this when you look at it, and that black part are the receipts. That's an actual trade that I put on at the beginning of August. I'm going to show you how you can duplicate that, or you can mimic it to get somewhere around 10 times a return on gold's trend. Stick with me. 5, 10, maybe a few more than that minutes. You're going to learn something new. I want to see what your price target for gold is in the comments too, by the way. Let's jump into it. All right. As I always say, let's get into it right now because this is kind of exciting. Gold is up 11% in September. It's one of the better months that we've seen in a long time. The reasons for it trading higher? They're not so great because you don't want to see this going on in the market. Is it going to continue? I've got the answer to that. Most importantly, I'm going to share 3 different ways that you can invest in gold, and one of them is going to give you an opportunity to 6-fold or maybe even 10-fold the returns that you see on gold, and they're growing every day. Now, a lot of you are going to say, hey, CJ, no, that's malarkey. It is an easy, and yes, it does include options. It is the easiest strategy, and I've got the receipts to show you how it's worked in my account, as well as an idea of how you might be able to do the same thing. Let's go to the slides, though. The biggest question, I already said it, 11% in 1 month. It's a huge return for gold. Is it going to continue? Is gold's run done is the question that's out there, and the answer, emphatically, I don't like to be excited about it, but is yes. You're excited if you're in gold right now. A lot of people still sitting out saying, hey, man, this run has got to be done. Whenever the market loves something this much, that's when sentiment goes to an extreme. You've heard me talk about that before, but this is different. I don't like it when I say that, but this is different. What we've got is a situation where you just have a rotation, a constant rotation of drivers for gold. First of all, it's smart in terms of having gold in a portfolio because you get in there and have an inflation hedge. Maintain your wealth is what we usually say. If you haven't seen some of my interviews with Colin, make sure you check out the library below because we actually talk about how you maintain your wealth with gold, silver, etc. But in this case, we're also using it as a hedge for what's going on in the market. And look at what's been rotating around here. You've had the rumors of Powell being fired. We know that's gone away, but that was back in April, and we saw gold jump at that point. But you also have the Fed losing its independence, possibly. Cases going to the Supreme Court, et cetera, et cetera, et cetera. The Fed is meant to be independent, and right now that's being challenged. And when you challenge that, you challenge the whole idea of a fiat currency, our value for the dollar, etc. And if you look down here, you've got the U.S. dollar is quietly breaking down. It's not so quiet. It is a full-on bear market right now for the U.S. dollar. If you look at it trading below its 20-month moving average, and it's been in that bear market trend for more than 6 months, and we're going to see it go lower. Why? Well, you got growing debt and tariff costs right now. You've got fears of recession. Everybody looks at what happened with interest rates just a couple weeks ago, and they say, hey, interest rates are coming down. Well, guess what? The 20 and the 30-year rates are going higher. It's because the smartest people in the room, the bond traders, are looking and seeing the same thing that everyone's talking about, but not quite afraid about, and that is a recession. You've got international demands. If you haven't seen the stories, check them out on Google, wherever you want to look at. You have countries that are repatriating their gold from New York back into their countries, and you have demand soaring. If you want to go down the rabbit hole, go check out Ray Dalio's video on how New World orders are formed and the superpowers change here. It has a lot to do with what's going on with gold. And then our geopolitical concerns. There are 27 other reasons. I shouldn't even be going through this because we're wasting time. 27 other reasons why gold could go higher. The bottom line is we are not done yet. I'm going to make fun of the sentiment read in just a second as well, but let's move on to the next chart. Look at what's been going on. Look at what has been going on with gold. This is your monthly chart. I'm going to go through 3 of them very quickly, so they're going to give you a decent read. this is what's happened, right? You can look back in time and obviously see the trend here. That red line is your 20-month moving average. That is the line of demarcation between a long-term bull and bear market. We have been in a long-term bull market on gold since the beginning of 2023, a 2-year run, and usually you see gold move for 4 to 5 years in these cycles. So if you look at it from that perspective, we're in the 4th, 5th inning of a 9-inning ball game. Hey, the World Series is getting ready to fire up, so I got to bring up baseball some way. But this run just continues, and it is breakneck. There's that 11% return in September. I'm expecting a little bit of a consolidation, and I'll show you the reason why in just a second. But expect that consolidation to happen here over the next few weeks, maybe through October. But the bottom line here is that we're going to head into the end of the year, and none of the concerns that I just brought up are going away. Gold is going to maintain that trend. When we see a consolidation, we'll see investors jumping back into the trend. Here's your shorter term daily look, and the two things that I always look at, and you know if you follow me, the 50-day moving average on GLD, and this is a U.S. gold fund, is trading higher, and that 200-day. Whenever I see that, I don't care if it's a stock, I don't care if it's an ETF, I don't care if it's an index, 50 and the 200-day moving higher. And that is a bull market situation from an intermediate perspective. Above the 20-month moving average, there is your formula for a long-term bull. And in this case, gold is exactly that. Another reason why we are not done with this run. You can see that we just shot from that 310 level, and keep this price in your memory for just a second when we look at my receipt on my gold trade. But right there when we were trading about at 308 or so on the GLD, and now we're trading all the way up at that $353 level today and ready to move even higher. So when I've got that 50-day moving average and that 200-day moving average along with the 20-month moving average moving higher, that is the formula for a long-term bull trend to continue. Gold right now, I see the GLD shares going up to a 400. It equates around to a 4,000, and we've heard calls for 4,000 to 5,000 on gold. So there is your answer on whether or not this run is done. It is not done, and we should expect it to continue higher. I did mention a short-term consolidation. This is the chart why. It gets a little busier when we start to look at this level. But this is a daily chart. It's got the Bollinger Bands, and I've also got an RSI, which is right here. Now, you notice the last time we had that RSI that went up into overbought territory, we saw a consolidation in gold and then a breakout that followed. Notice also here with the Bollinger Band, we had a break above that Bollinger Band that caused that quick 6% run in gold to happen. Long consolidation, and then we pop back up again. Well, we just broke above that Bollinger Band again. I think what you're going to see is this rally, the sharp rally in September, ease off in October as people look for what goes on typically in the fourth quarter, which is a strong quarter for stocks. All of the drivers that we already mentioned are still intact. Geopolitical, the dollar, all of those things. So this trend will consolidate and pick up just as we saw here. That is where your opportunity lies. Right now, if you've been sitting on the sideline watching gold go up 11% in a month, you've got a chance to maybe catch it on a little bit of a pullback down to that $340 level and trade it for the longer term. And the question always is, how do I trade this, CJ? So there's part of this. Don't lose your cool right now. Let gold come back down just a little. 340 on the U.S. gold fund, which is ticker symbol GLD. And that's where you start to add to a position or open one. And we expect all those triggers to stay in effect for the longer term. I've got a $400 price target on gold. I think it happens halfway through, or on GLD, I think it happens halfway through 2026. So how do you invest in that? The simplest one is, and I'm not making jokes, I'm going to smile when I say it, go to the Costco and buy some gold coins. Costco became famous for offering gold coins to their members. You can you can buy them, you have to order them first, etc., etc. The reason I make fun of it, and I mentioned sentiment earlier, is everybody started talking a year and a half or so ago about how you could go to Costco and buy gold, and how this was the top. If I can go to the store and buy gold with a minimal exchange fee, etc., etc., then this has got to be the top. Nobody expected to see what's continuing to happen right now, and it continues. But that's one of the reasons that we saw gold go mainstream and everybody start to latch onto this trend, and it is still on the run. Second thing you can do, and this is where we start to talk about actual normal investing, let's call it. You can go out and buy the GLD. That is the U.S. Gold Fund I already mentioned. This is an ETF that matches the movements in gold prices. You're not buying physical gold. It's always important to point that out. This is an ETF. You can buy it in an IRA. You can buy it in a regular brokerage account, wherever you like it, in a miner's account if you want. It still offers that opportunity to protect wealth, not as effectively as maybe having the coins in the safe, but nonetheless, it offers you same activity. Now, the last is where I want to start talking about multiples of return, and that is you leverage the continued bull run with a long-dated option. Now, when I mention options, some of you are going to say, I don't know about options. I'm not trading them. I'm not familiar with them, etc., etc. This is the most basic of the options trades out there. I urge everybody to get educated on options trading before you even think about it. Get some understanding of what goes on with an options. If you're already trading options, and this is going to be the easiest cake style type of investment that you can add to leverage a move. And with the GLD shares, believe it or not, it offers you a bigger multiple opportunity in this case for a couple of reasons. Let's look at how this goes out. The benefits of the long gold call strategy. Well, I'm looking at the June 2026 GLD $400 call. Right now, you're right around that 353. We're going to look at a comparison in a second, and that trades for about $2,245. What? It's not a cheap option? Listen to me. Cheap options are cheap for a reason. I'm going to say it one more time. Cheap options are cheap for a reason. If you're buying an option that expires at the end of the week, maybe even at the end of the month, you're not investing in a trend. You're investing in the speculation that something's going to move fast, aggressive, and in the right direction. Write that down. That is one thing to always remember. 0-day to expiration options, weekly options, even the monthlies in some cases don't offer you enough of time value, time premium, to let a trend play out. They are looking for a precise move, and that's why they're more speculative. In this particular case, we're playing an option that right now has 7, 8, 9 months until expiration. Guess what? That allows the trend to play out, and you get to leverage it. Now, the reason, if you look at these, $2,245, it would cost you $35,000 and change to control 100 shares. Each option contract controls 100 shares. It gives you a right to buy it at a certain price. So you can leverage the continued bull run with a long-dated option. Let me show you the details behind this and why it allows you to get that 6 to 10 times. That's serious. I've got the receipt in a second. 6 to 10 times return. So this is the easiest strategy out there. It allows you to play the trend. In this case, I'm looking at the June 2026 GLD 360. That call option trades for about $2,245 as of today. It allows me to control, or gives me the right to buy 100 shares of GLD. If I were to buy that today, it's going to cost me around $3,500 or $35,389. So $35,000 in change versus $2,200. It allows me to diversify the portfolio, to put less premium into it, less risk perhaps, but still have the advantage of it. If any time I can exercise that option and buy those shares for $360. Now, the gold option is a little different, because gold trades with much lower volatility. When we look at some of those hot stocks, the eVTOL, the quantum computing names, the nuclear names, etc., high volatility means you pay more for that premium for the option. In this case, these options are cheap. And I don't mean cheap as in buying less time. They're inexpensive, a higher value for somebody playing the trend. You can exercise the option at any time for $360 a share. You'd have to put the $36,000 on the table, but if it's trading at $440,000, then you're making money, and you don't have to make the decision until you decide to exercise the option. It is, as I mentioned, the simplest of option strategies. It allows you to leverage the move in gold. Period. End of sentence. You're still speculating, but you're speculating with a heavy trend. Here's how it plays out, and you're going to see the result in just a second of one of my trades that I did at the beginning of August. But this is all hypothetical. It's based on Black-Scholes model prices, so I've gone in and put the Black-Scholes model together with all these to get a theoretical value. But the first is an intrinsic value. It is what it is, as they say. There's that price, $2,245. If we trade up to that $400 price target on GLD, my return there is 78.2%. That's on that long-dated option. So on the third Friday of June in 2026, if we're trading at $400, that's worth $4,000, that option contract, because of intrinsic value. You've got the $400 minus the $360 strike price. I've made 78. You've made 13% if you went out there and spent that $35,000 on GLD shares. I'm doing 6 times better by holding that option alone. Let's look at the same option, but by December 31st, gold's trading at $400. End of the year, that could happen very easily. It's only 13% away, right? So 13% is what you get with the gold, the GLD shares, because it's 13% higher. But in my options, I've got $4,965 of value based on Black-Scholes. This is theoretical. This is something I don't just throw a dart at. That's 121% return. And the reason it's higher is because it's happened in a shorter period of time. Time is money with options. And in this case, a shorter period of time leaves more time premium in the option that I get to when I sell it. So 121% versus that 13%. Now I'm up to a 9.3 multiple. Let's look at gold and if it stretches higher. And this is within reason. A 25% move could happen over the next 8 months or so. And by June 18th, let's say it's trading at $450, the GLD fund. Well, that $2,200 option is now worth $9,000. That's the $450 minus the $360 intrinsic value. It doesn't go away. There's no need to calculate it. It is what it is. That option is now 300% higher. 27.2% is what you get by holding the GLD shares to that $450. That option is now done 11.1 times the leverage of holding GLD shares. There, my friends, is the leverage benefit of those long-dated call options. And when I go into the drawbacks, and there certainly are, options have risk just like anything else holding the GLD shares do, but this long-term trend right now is definitely favoring those investors that are looking at those long-dated calls. I did it myself, and I've done this a number of times over the last year. On August 1st, I told you I had the receipts. If you use Thinkorswim, you're familiar with this look. So on August 1st, you can see about 9:35 in the morning, just after the market opened, I bought 10 of the 305 calls, and that's when the GLD was trading at about 308, right at the beginning of August. In this particular case, obviously, trading well in the money right now, up around a 353. And if you looked at the actual investment of the GLD, you're up about 16 or so percent. And my return right now on this position is right around 167% for the same move. I'm tenfold in terms of the movement that I've gotten with that long-dated option. So a great way to leverage. And this is just in 3 months. And again, that's an actual example that has happened. But you've got to expect with reality when you're looking forward at these options trades. Right now, I believe that June option trade makes a good deal of sense. And leveraging a smooth move that we've seen in the GLD shares and gold, which would be the underlying at that point, is the way that I prefer to handle it. Either way, gold still makes sense in terms of the long-term bullish case. I believe everybody should be continuing to look at this trend to continue as we see none of those drivers going away. Remember, use the QR code right here. Sign up for the 5-stock watch list. Every week I deliver 5 different ideas to you. On Monday, you've got a small cap stock or a stock under $10. You've got technology stocks, a stock to short, everything that's in there, even an income stock. All you have to do is sign up for that report. We'll send it to you every Monday, free of charge. With that, I'm going to wish you the best trading success. Make sure you leave some comments down below and subscribe. I love to see the feedback. Where do you think gold is going? That's what I want to see down below. Till the next time, I wish you the best trading success. Have a great day, folks.